Welcome back to the channel for a morning market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we're going to get started today with Bitcoin on the 4-hour. People had been asking essentially about this situation here. Normally when price action closes a few times below the 8 and 21 cross, we will get a violent sell-off in anticipation of essentially that bearish cross playing out. And what I was pointing out is that we are essentially putting in a head and shoulders, and I was expecting another powerful burst to the upside, which is exactly what we got. You will notice here that essentially what is taking place is we were putting in essentially like holding a solid neckline support right here, the one that I'm just drawing in now. And while that was basically holding right here in this region, after the initial sell-off back down to the 50-55, we were just consolidating, waiting for this 8 and 21 red and yellow cross to happen. And people were expecting a massive sell-off in anticipation, but what I was expecting is exactly what to happen to play out. We got the push back up to the top of the range right here, or if you're going by candle closes, you could expect it as high as up here, back up to the green resistance line that we had put in here before, essentially like the all-time high topping out right here. So we now have our left shoulder neckline, head, right shoulder neckline, and then we would, I'm sorry, I said it the wrong way. We would have our left shoulder neckline, head, neckline, right shoulder, and then we would expect to come back down, and then if this holds, we could potentially consolidate and get moved to the upside. But what would be more likely to happen would be the measured move of the actual head and shoulders taking place, and that would probably result in something similar to this, which is what we were expecting and still potentially expecting, which would be a measured move down to the 89 moving average. Closer to the retest down here of the $20,990 range, or like essentially like 21,000. So that's what we're paying attention to. We are still once again below, the histogram is below the slope line. The slope line has flipped over red. We often will get a bounce right here and attempt to push back up to get back above the slope line, and when that fails, we will get a massive sell-off. And then finally, if we look down here to the Stoch slope, we have essentially been putting in the divergence we were talking about, multiple points. Here we had put in the high, here we had put in a lower high, and then on price action we had put in basically a high right here, and then we had put in a higher high right here, which is obviously divergence between our two indicator oscillators right here and price action. We also sold down below the support line that we were holding on the RSI, got the attempted pushback up of the RSI to get above the moving average on the RSI, and when we got to the EMA, we found that rejection right here, or we're expecting that rejection right here. That also lines up perfectly with the red dot right here from the parabolic SAR. Quite a few levels of confluence, and expecting a sell-off coming from that as well. And then you'll notice also here we have on futures, this explains why we weren't getting that violent dump in anticipation, because we had the red 8 all the way up here, the yellow down here on the 21, and we were not even close to crossing those over yet. We were still above the 21 in this case, so less people were anticipating that violent sell-off. Institutional money was attempting to buy that up, is attempting to buy that up to save price action, and that also lines up perfectly once again with the slope line on the TJD TD MACD, which we expect to get a bounce right here, attempt to save it and continue moving to the upside. It's still blue, so we have positive slope. If that fails and we get down below it, it will flip over red eventually, and then we'll get that massive sell-off. If you are not using these indicator oscillators, I highly recommend it. We have the TJD parabolic SAR with binary pivots and moving averages available free on TradingView. The TJD Stoch slope on the bottom right here, and the TJD TD MACD. Once again, all the descriptions and full names are in the description of the video, so I encourage you to check that out. Also, make sure you like and subscribe to the video and channel as well. So flipping over here next to Ethereum, you'll see Ethereum has been showing quite a bit of weakness. We got that 8 and 21 cross a while back, got the touchdown here in the exact same place as Bitcoin, the 50-55. But when we failed to get back above it, we got that massive dump that we were talking about in anticipation of the cross. which then resulted in the cross, came down almost all the way to the 200 EMA SMA, which is always a good buying opportunity. And you'll notice the Stoch slope gave us the green bearish control zone, potential accumulation zone, 2 green histograms in a row on the Stoch slope, and we did get the hard buy signal here as well. If you took that buy, that was a nice little move back up here from 590 to 620 basically. And now once again we're going to play it by ear, see what happens. Are we able to hold the 89, or do we get rejected and sell off? You'll also notice, as we were talking about in the group, that this was a Adam and Eve playing out. Here's our Adam, here's our rounding top Eve. That is a double top candlestick pattern, at which point in time when the neckline breaks here in purple, we would expect to get the measured move. Measured move in this case was hit on the initial sell-off at 595, and that was a nice short from 637, or if you took it closer to when I did up here at like 656. So nice little move right there, essentially resulting in like over a 12% sell-off without leverage. So, and Ethereum is looking more bearish than most of the other assets in the crypto space. Now flipping over to Bitcoin dominance, did exactly what we were talking about. Came up here, essentially like took out the previous top. We on that initial sell-off consolidated now above the 200 EMA and SMA, and you'll notice now key thing is happening. I don't hear anyone talking about this, but for the first time in a long time, essentially since basically back in January of 2020 on the daily, Bitcoin dominance now has a positive slope on the 200 EMA and SMA, and we are above price action. It's been a long time since this has happened. You'll see the dark blue line here and the brighter blue line right here have essentially been negative slope all through this area right here. We finally got price action above them in October, at the end of October, early November, and then got that initial push up, sold back off. And after the initial sell-off right here, came back down, found support on the 200 EMA SMA, and then we got our powerful pushback up here now to a new high right here, and are attempting to rival the previous top right there. We would expect this to continue moving to the upside long enough that essentially flip this back over blue, consolidate in this area, and Bitcoin gains more market cap. We were at Bitcoin dominance of about 60, almost 8% right now. And what we're expecting to happen is that to continue to rise. That means one of two things. Either Bitcoin is going to gain market cap in the overall crypto space by having like a large breakout to the upside, or Bitcoin is going to gain market cap percentage in the space by selling off, but selling off less violently than the altcoins. So if Bitcoin was going to get, say, a 5% drop, altcoins correspondingly might get a 10% drop, and more of that money would flow into Bitcoin out of altcoins as like the intermediary, instead of like just going straight into cash. Or alternatively, the money would be flowing out of altcoins into cash faster than it is out of Bitcoin, resulting in an increasing market cap dominance while we have a decreasing price in all of these assets. So that once again corresponds with what we're expecting. And then if you look at crypto total market cap right here, we're showing essentially a high on the TJD TD MACD, a lower high on the TJD TD MACD. We got the sell off and flipped this back over red once the histogram was below it. We did get a powerful pushback to the upside and flipped this back over blue, but you'll notice that when we put in that lower high, we also put in divergence from the top right here to the higher top right here, as opposed to the top right here and the lower top right here. And then once again, that corresponds as well with the Stoch slope. If you're not familiar with the Stoch slope, all that is multiple stochastics that you would normally use turned into a single line that turns red and blue, corresponding with the slope of the line itself. So instead of having your crosses and your two different lines, you just have one line consolidated and changes colors when it essentially flips the slope back over negative. Just a simplified way to look at it. And then I also have overlaid the RSI in white right here, and then the EMA of the RSI in yellow. And you're able to use those in correspondence in a simple and easy way. You can glance right at a chart and look at it and see once again that we have bearish divergence here. We put in a high, we put in a lower high on the indicator oscillator, put in a high on price action, put in a higher high on crypto market cap. Once again, a divergence, meaning that it took us less energy to move the price up higher. So we would expect that's not sustainable, that eventually we would get a massive sell-off or dump, which would take us back down to probably around that $536 billion range, which would correspond with Bitcoin dropping down to about $20,000 and retesting that breakout level. So, and then here we're looking at the DXY dollar index. Once again, everybody is talking about how crazy I was to say that we were potentially bottoming out in this area. But if you pay close attention here, you will notice that it's a little too early to call now, but we are attempting to get above the 8. We already tagged the 21 the first time. Next target is going to be the retest of the support that we broke down from, and potentially find it as resistance, corresponding with the 50-55 at $92 basically. And then if we look at our, let's switch over to the monthly here for a moment. This is essentially corresponding not only with the fractal from the previous sell-off that we had. So this entire fractal, you'll see how clearly this lines up with price action. I mean, it's literally to a T, which you would expect. And then also, that fractal itself essentially lines up, comes down here, retests. If we switch over to the indicator oscillator as well on the monthly, you'll notice we did the exact same thing here. We basically sold off, put in a low right there, and then got a powerful move back up, barely corresponding with price action, and then sold back off once again. And you'll notice that when we sold off again, we have a low right here, we have a higher low right here on the Stoch slope, we have a low right here, we have a much lower low right here on the Stoch slope. That is in fact bullish divergence, at which point in time we consolidated, put in a higher low, and then got that massive move back up. That move has been taking place since 2008. So you could say that on the macro, that the dollar has been in a bullish uptrend since 2008. It is obviously now 2020, almost 2021. That is a 12-year uptrend that we have basically been in inside of a macro downtrend. The idea of the dollar in general and, all currencies is that, over time they obviously weaken. So you would expect them to always be in a perpetual downtrend. But inside of that downtrend, you can expect there to be, macro, but smaller or micro versions inside the overall macro, up and down trends as well. So when we topped out here, you'll notice what we were talking about before, where we essentially got on top of the 200 moving average. Keep in mind, this is a monthly chart. So, just what we're seeing on the screen right now at this point in time is going back to 1986. So we've been selling off violently since 86, found our bottom here in 92, found our next top here in 2001, found our next bottom here in 2008. So, we're looking at like 7 and 10 year cycles, at which point in time 2008 to 2020 was 12 years to the upside. But for the first time literally on this entire chart that you can see, the price action is back above the 200 moving average, the EMA and SMA in dark blue and light blue right here. We essentially got that burst back up, topped out, came back down, found support on the 200 moving averages, came back up and came back down. And now once again, what we're looking at here is, are we going to put in divergence? We put in a low right here. We are currently at a slightly higher low on the Stoch slope, as opposed to once again on the TJD TD MACD, we put in a low, we put in a slightly higher low. Is this price action now going to find support and turn around and move to the upside? Once again, giving us bullish divergence on both indicator oscillators, corresponding to a higher low on price action right here. Typically what happens is you'll break above the 200 moving averages, come back down, test them as support, come back up, put in another high, usually a lower high, find support once again, and then you will get a move and take out this previous high right here, confirming that we are in fact in an uptrend, which you can expect when you put in a low, a higher low, a higher low, a higher low, a higher low, obviously with highs corresponding as well. So that's what I'm looking at right here. You'll notice also, based on this chart, that these moving averages, not only are we on top of them right now, but for the first time literally ever are both of them back to having a positive slope to the upside. So that takes an extremely long time to happen. You'll notice we had a slope to the downside on both of them all the way through this region right here. You'll notice the 200 EMA flipped back over positive. It's a little quicker to respond because it is weighted based on time. We flipped that back over here in 2014 to the upside. and now for the first time literally in existence on this chart, going back to the 1980s, we now have price action on top of both of them, and we have essentially flipped this 200 SMA with a positive slope to the upside. So you'll notice based on my cursor here, you can see where we bottomed out, and now we're moving back to the upside with a positive slope. As long as price action stays above that 87% region, we will continue to find support, move this to the upside, and continue to angle the slope back to the upside. So that would imply that we're going to get a strengthening dollar for an extended period of time, not just a year or a couple years, but potentially like a decade. Now I understand that fundamentally that doesn't make sense to people because we are printing money like crazy, or printing dollars like crazy. All this financial aid going out, stimulus, etc., etc. All this says is that the dollar is not going to remain strong compared to things like gold necessarily or Bitcoin, but it means the dollar is going to remain strong compared to other currencies around the world more likely. So we can print as much money as we want, print as many dollars as we want, do all kinds of negative interest rates or zero interest rates, or messing with monetary policy, etc., etc. But it's not necessarily just on its own, it's in relation to everyone else. So good way I use to explain this is imagine the USA is playing a game of Monopoly, and they have their Monopoly money, and the banker is running out of money, so they pull out some paper, or fire up the printer and print a bunch of extra $100, $500 bills, so the banker has money to pass out. That's going to affect the entire game, because everyone's dollars are going to be able to purchase less things inside of that Monopoly game. Now picture there are hundreds of other Monopoly games going on separately from that Monopoly game, and in each one of those you have the Swiss and the franc and all the other different currencies from around the world as well, and those same countries are doing the same thing, but instead of printing twice as much money like the USA did, they are printing 5 times or 10 times or 1,000 times as much money. So all of a sudden inside of their games, all the dollars that they're using, or all the currency that they're using, is just getting devalued faster. So it's not just about if you're devaluing your currency, which basically everyone is doing right now. It's about how fast you are devaluing your currency in relation to other countries around the world as well. So it's a big confidence game, and the reason that the U.S. still has confidence, obviously, is because of current policies around the world. If you are going to buy things like oil, for instance, which is why we call it the petrodollar, you in most countries have to settle in dollars. So if you're going to buy, one country is buying oil from another country, they have to use their currency to buy dollars to buy oil, and then the other country sells their oil into dollars and then converts it into their own currency if they so choose. So we are basically the intermediary between shit coins, the same way that Bitcoin is the intermediary between things like shit coins in crypto. So the idea being that essentially you have to transfer into that currency, and then you can transfer from that currency into whatever you want, as opposed to just being able to transfer straight from like Dogecoin into XRP. You have to go from Dogecoin into dollars into XRP. So that's essentially what we're looking at right there. And then as you zoom into smaller time frames, this is where everybody gets scared. You come down here, you break the 200, you get down to the 377 and the 528, fail to find support and sell off, and then that corresponds with essentially what we're looking for that bullish divergence, and essentially putting in another higher low followed by a macro higher high. If we can get up here and take out like that $100, $104 range, that's what I'm potentially expecting to happen in the future. So, and keep in mind that once again we're looking at charts that go back to like the 1980s, and it is now 2020, almost 2021. So you're essentially looking at like 30, 40, 50 year periods. We're looking at 100-year cycles, things like that. So doesn't just happen overnight. Don't expect that to just happen in a week or a month or a year. It takes quite a bit of time for these type of things to happen. Next we have Tesla. We spoke about this in the last video. I didn't do too much technical analysis, but I was specifically talking about essentially how I was expecting the opposite of what everybody else was expecting. We had the run up leading up to Tesla being added into the S&P. Tesla was added into the S&P, and exactly what I said happened. We started getting a massive sell-off and are continuing to get that sell-off. We've made it down now to the 21, but we already have had a 8% sell-off almost. Essentially what happened there is people already had Tesla in their portfolios. Fund managers already had Tesla in their portfolios because they were outperforming the market, and then it gets added into the market. So you are overweight then on Tesla because you're holding S&P and you're holding Tesla, and now you're holding S&P, which now has Tesla in it, plus you're holding Tesla. So you are basically like forced to responsibly rebalance your portfolio and sell off some of your spot Tesla. So that causes a sell off in Tesla, or perhaps sell off some of your S&P to rebalance the Tesla that you have. Therefore, once again, causes a sell-off in Tesla, as now there is more Tesla available to the market, or less demand for Tesla because the S&P is selling off. So, you have to pay attention to these things. And once again, triple bearish divergence on the 4-hour. We have a top here, a higher high here, a higher high here. We have a high here. We have a lower high here. We have a lower high here. We are now below the moving average on the Stoch slope, and on the TJD TD and then once again, if we look at the Stoch slope, we have 1, 2, 3 drives of bearish divergence. We have a large area inside of the bullish control zone. We have a medium area inside the bullish control zone, and now we have basically a rejection at the bullish control zone. Each of these obviously shows a hard sell as well. And then once again, if we look at the RSI and EMA of the RSI, we have a high here, a lower high here, and a lower high here. So again, we have triple bearish divergence on 3 different indicator oscillators, corresponding with price action. We are currently holding the 21. I would expect one more attempted push up here, and then a push back down to that $580 range. That is going to be a massive sell-off, extremely violent. If that holds, we could find support there and continue to the upside. If it does not hold at the 50, 55, the next target would be 537, and then final target back down to the 200 EMA SMA at $451, which would absolutely devastate people, I'm sure, as from our top here, we were looking at a 15% drop, a 21% drop, and then finally a 34% drop. So massive downside potential, downside risk on Tesla, huge risk reward ratio from this short right here. I am currently out of Tesla. I'm not shorting it at the moment just because it's extremely volatile, and you never know what's going to happen with this bad boy. Also, Elon Musk is a madman, and you never know when he's just going to do like massive buybacks or something like that, or tweet some crazy stuff. So while I'm bearish on Tesla, I'm not currently in a short on Tesla. So, and keep in mind, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And then also, if you take a look at gold here, essentially we topped out with gold here in August, and have been in this downward consolidating pattern right here, essentially like this downward channel, putting in a low, lower low, lower low again, found support on the 200 EMA SMA, bounce back up, attempting to get back up here to potentially take out this high at 1970. If we take that out, it's going to look a lot like, essentially we're headed back up to the top of the range to take out the all-time high and get that long-term trending move to the upside, which is what I'm expecting. Essentially, gold has been in a long-term consolidation downtrend for years, and broke out of that downtrend. And once it breaks out, it tends to sell off violently, consolidate. So our previous high all time was back here in 2011. So again, from 2011 to the low down here in 2016, we're talking about a 5-year downtrend consolidation pattern, at which point in time we did not quite get back down to the 200 moving average, and then we were moving back up. I was telling people to that I was bullish on gold. Essentially, when we took out this point right here at 1300, I was extremely bullish on gold, and my opinion was to accumulate at the time. We then got a over 50% move in gold since then, which was obviously a massive burst to the upside. Took out the all-time high, telling people here at 2000 after taking out the all-time high that I was expecting a sell-off and essentially like a extended consolidation period after taking out the all-time high. Exactly what I'm expecting on Bitcoin. So picture this as 2007 in 2017 rather in Bitcoin, and this is 2020 in Bitcoin. We just took out the all-time high. We would expect to come back down here, retest the previous top right here, hopefully find support. But based on Bitcoin's volatility in comparison to gold, I would expect a stronger sell back off. But if we consolidated here and did the exact same thing as gold did, that would essentially correspond to a $20,000 retest on Bitcoin. But more realistically, we could see something like a 16, a 12, a 10, even a based on what I was talking about previously, we could see a $7,000 or $6,000 Bitcoin, which would correspond to basically like mining costs. And miners putting in like a hard wall to stop price from going below mining costs. But once again, Bitcoin is extremely volatile, and we could go into a long-term downtrend. Would not be uncommon, but after a long period of consolidation, a 3-year consolidation from our previous all-time high at 20,000 to now, I wouldn't necessarily expect us to just take out the high and then go back into a bearish consolidation period, for that amount of time. But it's easy to think that we could go into a 6-month, 1-year, etc. consolidation pattern before breaking to the upside. As you consider, gold went into that, topped out in 2011, bottomed out in 2016. So you're talking about 5 years. Took another essentially 5 years to get back up here to the all-time high. And then, since we got to our all-time high right here, to now, we've already put in a few months. So if you times that out, by essentially double for Bitcoin, it's not unrealistic to think that Bitcoin could go into like a 6-month, 9-month, or year-long consolidation before moving back to the upside, while the indicators, oscillators, and demand for price action and for this asset itself reset. So I think that's all we're going to talk about today. Silver also, just to touch base on that. Silver is looking more bullish than gold is. Essentially came back down here, got the support, and then got the bounce back up, retested, already took out that high, corresponding to this one right here, and is potentially going to be moving back to the upside. Came down as low as like $22. I was buying all through like that $22, $23 region once again. Dollar cost averaging into an uptrend, which is what I always say to do, not into a downtrend. Easy to buy into a strong asset and be in profit than it is to try to pick the bottom and buy an asset on the way down when you have no idea when the bottom is going to be. So there you have it for today, guys. Some technical analysis on all different markets. If you have any specific interests or requests, please leave them in the comments. If you have any questions as well. Also, I do appreciate you liking and subscribing if you like the content that I provide on this channel, Crypto Trend Trader, and I'm out of here.